Welcome to Category Visionaries, the show dedicated to exploring exciting visions for the future from the founders who are on the front lines building it. In each episode, we'll speak with a visionary founder who's building a new category or reimagining an existing one. We'll learn about the problem they solve, how their technology works, and unpack their vision for the future. I'm your host, Brett Stapper, CEO of Frontlines Media. Now let's dive right into today's episode. Hey, founders, and thank you for listening. Today I'm speaking with Wade Arnold, CEO and founder of Moov, an embedded payments platform that's raised $77.5 million in funding. Wade, thanks for chatting with me today.
Hey, I appreciate you having me.
Not a problem at all, and super excited for our conversation. So I'd love to just begin here with a little bit more about your background, your journey, and what you were doing before starting the company.
Absolutely. So I've been in financial services since I worked at a company, Macromedia. We were bought by Adobe, and at Adobe, I helped pre-populate loan applications inside of Acrobat Reader. And so I was on the kind of Flash team and helped connect that. And that transferred into starting a company, Banno, which was a digital banking company that sold to Jack Henry in 2014. Helped start a company, Billgo, which is a modern bill pay platform. And really all those experiences led me to creating Moov because I was so frustrated building on top of, the legacy infrastructure that was designed before the internet, before the cloud, before mobile, before all these technologies that we take for granted.
That's awesome. A few things that we like to ask, and the goal here is really just to better understand what makes you tick as a founder. First one, what founder, CEO do you admire the most, and what do you admire about them?
For me, I've always loved the writing of Ben Horowitz, which when Andreessen Horowitz led our Series A, made for a really hard negotiation in that I was going to say yes no matter what, because he was kind of this thought leader from afar, from his writing and his books. And I think it's really interesting how he promotes company culture first and foremost. That's really what he writes about. And so for me, I think being a second-time founder, this time around, I'm really a lot more focused on the culture of the organization versus simply, what product do we bring to market.
Yeah, I love Ben Horowitz. He's so fascinating. What about books? Outside of anything written by Ben Horowitz, what would you say has had the greatest impact on you? Not really as a founder, but just as a human.
Yeah. So, I love like Clayton Christensen and Steve Blank, but I continue to reread Tim O'Reilly's, What's the Future, Why It's Up to Us. And I think I grew up kind of in this open source revolution. And that book for me, it's almost like a history lesson of a life that I got to live. I just turned 45 last week and got to grow up in this kind of .com, internet revolution. And so for me, I think a lot of the principles that he lays out in that book, I resonate with, and it's the, type of human that I want to be and type of entrepreneur that I want to be.
Super interesting. I've not read that book yet. Should I add it to my list?
I would add it to your list. I think it's good to find something that challenges you. And sometimes there's books that, the context that you bring into reading it changes what you get out of it. And for me, those are the best books that you can kind of reread, and it's more applicable to the current stage of your life rather than, just a book on, CI/CD pipelines. Like that book's old as soon as it's written.
Yeah, I have several books that I like to read on a regular basis. And my favorite thing to do is to, I try to use like a different color highlighter so I can go back and say, okay, 3 years ago, I read this book and, these things were important to me. I highlighted them. They're in orange. You go back and read it again. And, you're highlighting completely different stuff because, like you said, kind of like that context has changed. The problem you're trying to solve when rereading the book has changed. So I'm a big fan of just going back to them and reading some of these books over and over again. And you seem to get something different every single time you read it.
Yeah. And I think that's an incredible author when that's applicable, when your context changes the outcome of reading the book.
Yeah, 100% agree. Now let's dive a bit deeper into the company. So how we like to start this part of the interview is really talking about the problem you solve. So at a very high level, what problem do you solve?
Yeah, so Moov allows software engineers or SaaS companies to accept, store, send, and spend money in the United States. And that problem hasn't been solved by anyone. It's normally relegated maybe to a bank, maybe a bunch of different vendors that do those different pieces. And really the founding story and kind of how we got after this is, if every company is going to become a software company, and then, my board member, Angela Strange, kind of got famous for saying every software company is going to become a fintech. My argument was not every, one of these software companies is going to want to learn payments. And so Moov is designed to be a little bit opinionated to make it easy for people to integrate payments into their software stack. And if you look at the world of software, of SaaS companies, less than 8% of all SaaS companies have payments embedded inside of it. That obviously they may do billing somewhere segmented from that, but actually having the payment acceptance and integrated that into their platform. And I felt like, there's all these acronyms, there's all these pain points in order to figure out how to do this. And the world needed a company that, abstracted that so that it could just be a feature rather than like a department of a company.
You take us back then, it looks like to August 2020 when the company was founded. What was it about this problem specifically that made you say, yep, that's it, I'm going to go build a company around that?
Yeah, so oddly, it started as an open source project on my Wade Arnold GitHub account. And I had been a CEO of a company that was acquired. And, when I left that company, I was much better at buy-side analyst meetings than I was at writing software. And when I had started the company, I was very much a developer. So I knew this domain of payments and wanted to kind of utilize new tools. VMware was cool before I had started this stuff. So just leveraging new technologies. And oddly, hundreds of people started starring it and forking it. And that was a little shocking to me, was how many Go developers want an ACH parser. And so just kind of followed that path. And I was in a life position where I didn't have to work. So I got to work on this open source project for a year. And I think COVID had something to do with that. But that really led into reaching out to these contributors and figuring out nobody really had good access to low-level payment protocols. A lot of that was written in COBOL or Fortran and running on an AS400 or Z-series mainframe. And nobody had kind of built this stuff for modern software development. And so that was the impetus, was then going out and speaking with these people that had contributed back to open source and realizing they had exactly the same pain point that I had in building technology at Bilgo and at Banno previously. And so when I realized there was a lot more Wade Arnolds in the world that wanted to have a modern technology stack for payments, that's what really led to the idea.
And then who are some examples of companies who really want that modern payment stack?
Yeah, so we build the software, for any back office type tool. So if you think about our customers are, whether that's like companies like Built Technologies, which is a construction management platform, they are the kind of vertically specific back office SaaS company that's running the business. And so their external competitor would be like a horizontal company, like a Xero or maybe Intuit QuickBooks, something like that. To some extent, Square, these are these back office tools. And so there's a lot of great companies out there that they want to be that primary interface for the business. So whether that's, services for plumbers to construction workers to law offices to political donations, we service drastically different businesses, but they all kind of integrate it at the same level.
Super interesting. Can you give us an idea of the type of growth and adoption that you're seeing today?
Yeah, it's been crazy. So we are a U.S. licensed acquiring processor, issuer processor, connected to the clearinghouse for real-time payments and the Federal Reserve for things like ACH. But it took $40 million until you could say that's true. So it's really been a heads down type endeavor to get to that spot where you're on Visa and MasterCard's website and able to do that. So we went from zero. I think we did $100,000 in total revenue last year, and we're over 40 million in revenue this year. So it's been a pretty wild experience. And I can assure you, everything that we thought was going to work 9 months ago, we've had to redo some of those processes or redo some of the bottlenecks in our software in order to experience that growth. And we think we're going to continue doing that for the next couple of years.
You talked to us about that Series A you closed. So that was in December 2020. So not too long after founding the company. How'd you pull that off? And you landed Andreessen Horowitz. So it makes sense for the earlier part of our conversation. But how did you pull that off so early on in the journey?
I think there was a big question. So, Matt Harris at Bain Capital led our seed round, and the seed round it's great. This is an idea. I had personally put about $1 million into the project beforehand, but there was still a question like, there's a lot of fin in fintech, right? So it wasn't maybe a question whether or not we could build a new technology stack. There was a question whether or not, all four card brands would allow us on their backbone of their network. So there's a lot of great companies like Stripe or Braintree that are gateways, and they sit on top of some of our competitors like First Data and WorldPay, but they don't actually connect directly into the payment networks. And so that was a big question of, can we convince everybody with no customers, no processing volume to let us onto the network? And Visa, who's now an investor in our Series B, was the first to let us in. So we appreciate that partnership. But you got Visa, and then you got Discover, and then you got MasterCard, and then you got American Express, and you had to kind of work through that system in order to get certified and on the network. And I think that to me was the impetus for that Series A, was really, we've overcome maybe the bigger obstacle, which is just, are you allowed to play on the network or not?
What was the lowest point you've had so far in building the company? The reason I ask is I'm sure you see it, but being a startup founder seems to be glamorized a lot, and all the good stories get told, but often the real painful kind of dark moments, those don't ever seem to be talked about very much. So have you had any low moments?
Every day, every other hour. I joke that it's just a roller coaster. 1 minute I think I'm going, change the entire financial services landscape in the United States and be a billionaire, and all the spoils that come along with industry changing companies. And, an hour later, I'll probably think, why did I start this? And we're all going to go under. Nothing's ever going to work. This was too audacious. But, for me, I think the lowest point is we developed a go-to-market and sales team too early. The product wasn't mature enough. The product wasn't ready. And we had to hire, customer success people and VP of revenue, and just incredible humans. They did nothing wrong, but had them, and that created a forcing function to realize the product wasn't mature enough to deconvert from some of our large competitors that have been around since 1958. So they've got a few more features than us, and then having to let that team go and realize we need to double down on engineering, not on go to market. And so that was a year ago. That sucks, right? I made the wrong decision. They did nothing wrong. They're great humans that, wish I had most of them back today. But, I think sometimes getting too excited too early before you have enough proof points to do the investment is the hardest part about being a CEO.
Yeah, I think any founder listening in can definitely relate there, and has definitely experienced something very similar. What about your journey to find product market fit? What was that like, and what did you learn from that whole process?
I think the hard thing about payments is that there's really not a business that doesn't do payments, if you think about it. And so, it's good for a pitch deck. The TAM is like everybody, but that makes it really hard to figure out who you should be speaking with. And so, if you think about Moov started as this open source project, it was like, oh man, we're going to do, a PLG motion, people hit the open source project, and then they'll realize they don't want to make sure it goes through at 4 p.m. on Friday night. And so then they'll pay for it, and yada, yada, yada. The reality is payments is a big decision. And so the CFO is involved, the CPO is involved, a lot of times the founder is involved because the company's reputation is at risk if this decision doesn't work. And so we really had to switch from, there's obviously a sandbox and you can build a prototype and all those type of things, but it typically doesn't lead to an actual sale. That person can say no, but they usually can't say yes. So that process of figuring out who we should be speaking with and really led to more of a more traditional enterprise sales motion for going to market. That was very painful. And then also realizing that, it became really important to say no to people right away. So, we're a cloud-based payments processor. We can process tens of thousands of transactions concurrently a second, like the only company who can do that. So we went out and we talked to companies like Nike and Adidas and, and Supreme that did do, unique product drops where 1 million people hit the buy button at the same time. And I actually think we're the only company in the world that can solve that problem. But we built our company, we built our dashboard, and we built a lot of our tooling for SaaS companies. And so you would go meet with these people and realize, yeah, they have that problem, but they don't take advantage of all the other things that we created that really allow a SaaS company to be successful, like onboarding. If we have a customer that onboarded 60,000 small businesses, onboarding is really important for them. If you're selling to Nike, they onboard once. So that feature isn't very, very important. And so for us, it was like, we had this big vision for what we wanted to build, and obviously, had different features that we thought we could sell almost independently, and bringing that back to staying very focused on, vertical SaaS companies that serve an industry or serve a market uniquely, and being able to allow them to integrate the platform so that, those businesses could get money faster and they could reconcile data faster. That was really the value proposition. And anytime we veer away from that, we can accept an e-commerce checkout, but that doesn't mean we have the right to win those deals. And so that to me was the hardest part of having this unique platform, was figuring out, the right customers to go after that you can uniquely solve their problems.
This show is brought to you by Frontlines Media, a podcast production studio that helps B2B founders launch, manage, and grow their own podcast. Now, if you're a founder, you may be thinking, I don't have time to host a podcast. I've got a company to build. Well, that's exactly what we built our service to do. You show up and host, and we handle literally everything else. To set up a call to discuss launching your own podcast, visit frontlines.io/podcast. Now, back to today's episode.
What about your market category? It sounds like this is a category creation play, but I could be totally wrong there. So what is your market category, and do you view this as a new category that you're creating?
Yeah, I think, payments is as old as time, right? Payments are the first thing computers were built for. So in some way, you always get, pointed back, and it's Moov to me is a new market category. There's nobody doing what we're doing, which can be good because you're defining a new category. And it's also bad because people will say things like, well, how do you compare to Stripe? And you're like, yes, they do payments as well. What's the question here? We don't do global anonymous e-commerce checkout with WordPress plugins. They uniquely service that customer, but our customers, aren't using a shopping cart, right? They're the homeowners association as a service backend processor. And so they need a lot of different things that Stripe doesn't provide. And so I think being able to define a new category is extremely exciting as an entrepreneur, but it's extremely painful from a go-to-market strategy because you're not an incrementally, better mousetrap. You're a different category of offering.
And sorry, what is the actual category term that you've come up with?
Well, maybe we can come up with one on this podcast, but these, Moov as its simplest way, explaining it to my kids, it's like Cash App or Venmo as a service that you can embed into your product offering, to which my kids say, why don't they just use Venmo? But it really allows that whole kind of wallet infrastructure and acceptance and disbursements and spending off of that wallet, which is a kind of a lightweight bank account, for lack of a better term.
From a marketing perspective, what have you gotten right? What have you done to really rise above the noise?
Yeah, I think that we chose to put all of our marketing into pleasing developers. So we have a community of kind of surrounded by our open source projects of over 4,000 people in our Slack channel, which I didn't know there were that many humans that cared about low-level payments, but that's been exciting. We created a conference called FinTech DevCon, which is, presented by Moov, but there's no sales pitches. It's not an industry event. It's a developer event, and people are sharing roadblock talks and how they've overcome challenges inside of the space. And so I think putting our brand as a, developer first company has been a key differentiator for us. The majority of our leads come from those kind of investments that we're doing into giving first or sharing knowledge. And we think a better educated buyer is going to choose Moov over some of our competition. So that's been really successful. I think it's, was super audacious to decide to, run a 500-person conference as a seed startup company, but we've really tried to link our brand to pleasing developers and make it really easy to embed payments.
How did you think about ROI for that conference? That's something that I've talked to a lot of founders about, and everyone wants to do it. Then as soon as you start actually looking into the numbers, things get expensive. It adds up. The costs really start to add up. And then, of course, the question comes up, okay, how are we going to get an ROI from this? So how did you think about measuring ROI, or was it 100% focused on just adding value, and you had this belief that if you added value, that the ROI would come eventually?
Yeah, I think year one, it was just a belief that not only was there a need in the marketplace for Moov as a commercial entity, there was that same need was being powered by a lack of education in the marketplace. So like kind of the old guard, it's, hey, payments are hard, pay me $100,000 and I'll give you some soap docs, but let's make this deal at Ruth Chris. And then we can tell the second class citizens, the developers, what to do. And that's our primary competition still today, kind of the old IBM mindset, pre-Red Hat type mindset of IBM. And so what we wanted to do was kind of be a beacon for, leading with education and leading with, this payments isn't any harder than configuring Kubernetes, right? I mean, that's hard stuff as well. So if you can get knowledge in the hands of developers, then we wanted our brand associated with that. And we felt like in payments, it's a very noisy marketplace. There's probably 10,000 companies that say they're a payments processor. That's a lowercase p, they process payments. There's only like 7 of us in the country that actually can put capital P processor. We put the message over a socket onto VisaNet or a BankNet from MasterCard. So how do you differentiate? How do you separate the fact that it's your software Moov and Visa versus your software, a reseller, a gateway, legacy incumbent, a CSV file, and then Visa. And for us, it was educating the market so that they could make a better decision. And that was, it started as an audacious goal, and but has really proven to allow the Moov brand. We're 3 years old, 110 people, very small company, but people know the brand and put it up there with, I think, iconic fintech companies like Stripe and Plaid and as great developer-focused organizations.
As I mentioned there in the intro, you've raised over $77 million to date. What have you learned about fundraising throughout this journey?
It never gets easier. I think what's really hard about infrastructure companies, these are really hard problems, and the incumbents have very large moats. And for me, you can't ask somebody to switch off of a legacy incumbent if 20% of their transactions go through Apple Pay and you're not listed on Apple's website, right? It's just, that's not the lean startup. That's not agile. That is just take the documentation, spend $2 million and be on Apple's website and get it done. And so we've had to find investors that believe in the vision that maybe this cloud thing and internet thing's going to catch on, and payments, the TAM of payments is going to be much bigger than what it is today. It's not going to be, growing with GDP, but it could be twice as big because we allow more developers to embed payments into their software. And being able to articulate that message to an audience that doesn't always know that, ins and outs of how payments works, that's been really hard. And especially if you come at it kind of that lean startup mentality, like, oh, we're going to fail fast and pivot and, yada, yada, yada. Like, nope, we're going to slug it out and we're going to build all these features, and it's going to cost, tens of millions of dollars in order to get a minimum viable product, for lack of a better word, into the market. And then it's going to continue costing, hundreds of millions over the decade to come in order to get all the things built. And so if the VC believes that, hey, this is the right team, this is the right vision to go take on that slug of a grind, then they're probably on our cap table. And if they think, oh, this is incrementally different than something else that's out there in the marketplace, then they've usually passed on the opportunity.
Let's imagine you were starting the company again today from scratch. Based on everything you've learned so far, what would be the number one piece of advice you'd give yourself?
Oh man, that's so good. I think I'd hire 50 engineers and not even build a website, put our heads down for 3 years and then come up and say, it's ready, which is somewhat the antithesis of like every startup book you've ever read. But I think if you wanted to go build something in education or insurance or healthcare or, government, these are industries that have incumbents that have large moats and large feature sets. And I think that you have to have enough of those features for somebody to switch off, which takes a long time. And, the rest of it can be a little bit distracting. And obviously the most precious resource is your time, and being able to kind of get further along before we started, interacting with prospective customers is probably worthwhile. And, I knew that 3 years ago, but everything inside of you, including, your advisors and board members, says, oh, you need to be talking to people. You need to be doing this, which I agree with, but maybe not as much as we did.
Final question for you. Let's zoom out 3 to 5 years into the future. What's the big picture vision that you're building here?
Yeah. So for us, I think we can be the market leader for software development companies, SaaS companies, to embed US-based payments inside of it. That's going to take us a while in order to accomplish that vision. And then we're already, from existing customers, getting the pull like, hey, by the way, 9% of our revenue comes from Canada. We don't want to, go find the move of Canada or the move of the EU. What's your roadmap there? And I think the software world doesn't, financial services definitely knows state and federal boundaries. SaaS companies do not. And so over time, we'll need to expand the same offering, but have the risk and the compliance and the licenses and other markets, so that again, people want to move money. They don't want to learn payments.
Amazing. Wade, I love the vision, and I love everything you're doing, and I've loved this conversation, and I know it's going to be a hit with our audience. Before we wrap up here, if there's anyone that's listening in and they just want to follow along with your company building journey, where should they go?
Yeah, so we're pretty active on LinkedIn, so just follow Moov on LinkedIn. If you want to see my frustrations and rants of being a founder, I'm at Wade Arnold on Twitter, or I guess X, and my most recent tweet is of being pissed off about our documentation being hard to follow. And that's just the role of a founder. Our job is to dig deep into every piece of what we build and make sure it's at the bar that is high enough for us to be proud of.
Amazing. I love it. Wade, thanks so much for taking the time to chat. Really appreciate it.
Thanks, Brett.
This episode of Category Visionaries is brought to you by Frontlines Media, Silicon Valley's leading podcast production studio. If you're a B2B founder looking for help launching and growing your own podcast, visit frontlines.io/podcast. And for the latest episode, search for Category Visionaries on your podcast platform of choice. Thanks for listening, and we'll catch you on the next episode.